So you can earn 9.62% interest on up to $10,000. Now, the way this is actually currently being done is with I-bonds. And in order to be able to apply for I-bonds, sometimes there's some rigorous process to kind of go through and fill out. But the nice thing is there is a bank called Yada Bank, which I've actually talked about here on this channel before, on being able to go through the process and sign up for an I-bond and being able to earn that nice 9.62% interest. Now, there's a few things we want to talk about when it comes to being able to earn this interest and some of the stipulations with it. But as we go through this, if it is something you want to check out, I will have a link in the show notes down below to Yada Bank. It gives you some actual bonuses for signing up for Yada, which actually gives you like raffle tickets to earn money every single week, which is really cool. But before we even do that, one thing I just want to show you for an example, if you actually take $5,000 and invest it over that period of 1 year at that 9.62%, that would equal out to pretty much $490 right over here for you in that 1 year's time. Now, again, there are some stipulations that we got to go over, so let's go ahead and talk about those as well. Now, first and foremost, the max that you can actually put in is going to be that $10,000 as you saw there. That is what you can put up into this account. Now, it does say right here that the rate is guaranteed for 6 months. So obviously things can and probably will honestly change over time, but still, for that kind of rate, it's not a bad way to actually, keep your money safe, especially during high inflation. Now, there's a few other things you got to note as well too, and Yada does have like a whole breakdown section as well too. So if you want to, after you check out the link in the show notes down below, you can go in and read all through their like FAQs and stuff too. So right here it says, can I access iBond Bucket, which is kind of like their savings account fund within a year of purchase? And it says no. You had to have the fund in there for a minimum of 1 year. And then if you actually cash out anytime after the 1 year, but before the total of 5 years, you'll actually lose the last 3 months of interest. So even though that does sound like a lot, if obviously you hold it for 1 whole year and then you need some of that money, you're still probably going to earn more than you would have if you just left it in a traditional bank, because they're obviously not paying a lot. But you can see here, so you want to be holding it up to that 5 years, which if we go to that calculator right now, granted, they're probably not going to keep that same APY all 5 years, but if they did, your 5,000 would be worth almost $8,000, which is pretty cool there. And again, you can do up to $10,000 on there if you needed to. And so this is kind of looked at almost like a like a CD, where obviously pulling it out, you're going to lose out some of that money. And the thing is, it is not FDIC insured, but one thing to keep in mind, this is backed by the federal government. I believe it was right over here. You can see here, it is backed by the federal government. So you are going to be in pretty good hands when it comes to making sure that your money's still going to be there in that 1 to 5 year time period when you do want to pull out that money. So like I mentioned, if you guys want to earn that 9.62% interest as of right now, definitely check out the link in the show notes down below. That rate can most likely change, so make sure you get started right away. Now, if you decide not to want to go ahead and do the I-bonds, but you still want to actually earn some interest on your savings, check out my video right over here on screen, where I'll post a video of some of the highest earning interest. Some of the interest rates actually have gone up since I made this video, but still worth checking out because you can earn that higher interest on your savings.